Some pretty choppy action in the markets today. I mean, more than 122-point swing today for the Dow Jones Industrial. So let's take a look at the action. We've got Jason Pride, Glenn Mead, Director of Investment Strategy. He's going to tell us what investors should be watching in the international markets, but aren't and should. Along with Larry Shover joining us live from the CME. Larry, let's start with you. Go ahead. What was your thought today?
Well, today the market was somewhat static. I mean, there's nothing going on behind me, but there were some important exceptions at the margin. Let's consider the fact that ISM non-manufacturing data came out pretty darn good today. That's on the heels of a good manufacturing report last week. Combine that with the fact that the expectations for central banks are starting to evolve just a little bit. But the one thing that troubles traders right now is that bonds are outperforming stocks, or maybe not outperforming, but they're leading the stock market right now, except for vice versa. Nobody really knows if that's temporary or if that's something that's waiting to happen in a more dramatic fashion. But the bond market is definitely leading the stock market, and that does concern us.
Hey, Jason, let me pick on what Larry just said. I thought we saw this tremendous outflow from bonds into equities. It wasn't the great rotation, but it was a slow rotation. What did you expect it to continue and equities to continue to drive higher?
So we expect equities to continue to grind higher. I don't know if I would say drive higher. Main reason being that the market's been up a pretty considerable amount so far this year. But underlying that, you really have three primary factors underlying that. One, economic growth is still pointing in the right direction. Indicators today showed that yet again. Number two is your starting valuations on equities are fairly reasonable at this point in time. Nothing astronomical sort of valuation that you think will come crashing back down. And number three is, let's face it, the Fed is still very accommodative. Whether they begin tapering soon or not,
we've got Tesla numbers. I'm sorry to interrupt. We've got Tesla numbers, and we need to get right to those because the stock is indeed falling. Who's got it? Ooh. Oh, I'm sorry. Okay, I'm sorry. We're going through them right now, but if we could possibly put up the bid and the ask, you can see that the close of the session was $176.81, and the bid right now is $162.90. The ask $164. So clearly, these numbers, at least at first blush, and this all could change, as Adam knows all too well, first blush, but the expectation was 11 cents. And the revenue, $534 million expectation. You know,
the question is going to be, what's going wrong with Tesla? Is it the fact that they didn't sell 5,000 cars, everyone expecting to beat that? Or is the issue, they make some of their money, quite a bit, on meeting those California regulations because other car makers aren't able to provide electric cars, so they actually buy things from Tesla to get the numbers up in line. Are they making money there?
Okay, it looks like the revenue was, tell me again, Mark, $603 million. 603 million. So the revenue is a beat here. The EPS, look, this is a growing company. They take a lot of their money. They've got expenses as they try to increase the size of their assembly line out in Fremont, California. So they spend a lot in the EPS. I'm at the moment, do we have it? I see a Q3 GAAP share loss of 32 cents. That's the GAAP share. Right. So generally accepted accounting principles of 32 cents as we go through it. The expectation was to see a gain of 11 cents, Adam.
Big disappointment there, and a lot of people are going to wondering, as we get this report and start parsing through it, where was the stumble, or is it a stumble? I mean, Elon Musk will spin this in some manner as, look, I'm changing the automobile industry, plus they're going to be facing more competition. Mercedes coming out with an electric, BMW with an electric.
And can I just say, too, Tesla is announcing it wants to ramp up production to meet demand for 2014. They're in essence saying, boy, demand is so good, we need to ramp up because we're not able to churn out as many as we possibly can at the minute. And Larry Shover, the stock is falling right now, $160, so it's not necessarily improving as the minutes go by with these numbers.
No, it's not, but that's not really a big deal in the scheme of things. I mean, good grief, the options market was implying about a 12 to 13% move. That would be a $22 move in the stock, one way or the other. There was a lot of speculation on the upside, and let's just face it, right now people are infatuated with this stock. A lot of weak hands own it. We need to get investors in there who understand the stability of the company. It's a technology company that, good grief, its gross profit margin might get 25% in the year 2013. That is stunning. So any kind of drawdown like this, it's a fantastic buy. I mean, the company is doing very well. It's blowing the doors off of production targets. It's really a can't miss.
You know
right
what?
now,
the adjusted earnings per share is 12. It's actually a beat. The adjusted earnings per share is 12 cents on adjusted revenue of $602 million. Yeah. So it looks as if what the investors investors are maybe not digesting this, but it actually looks as if Tesla's delivering better than the street's expecting.
Okay, maybe it's the outlook.
Yeah.
It says Q4 is expected to be about the same as non-GAAP Q3. But can I also say, to underscore what you just said, Larry, they see total expected deliveries for 2013 to be 21,500. I believe, Adam, that's better than expected.
It's much better than expected, and they intend to. They're saying they're going to ramp up production. I mean, look, Tesla's never going to be able to compete for like a GM, at some point 40,000 cars a year, whereas General Motors is 3 million cars a year. But they've got a market here, and they sell parts to Mercedes and to other manufacturers who are going to be getting into the electric market. Is that where their future is going to be?
Well, if you're asking me, I think it will. But I think right now, what I'm concerned with is the weak hands that own the stock and why that's a great opportunity for the investor right now. At the CBOE, there was somebody who bought a call option, a 230 strike, giving them the right to buy 192,500 shares of the stock. Now that the earnings didn't blow the doors off of everybody, they're selling this stock. So they have a unique niche in the market. They're ahead of the game. It's really a good valued stock right now, especially as it's selling off $10 or $15 a share.
The new one, the Tesla X, which is the crossover SUV, they say they're fast-tracking that one. They want to get that out there as possible, as quickly as possible. They are accelerating the work on that, clearly because they see a lot of people who want that, right, Larry? I mean, why not? To have the Tesla and it's a crossover SUV for people with kids?
Yeah, people don't want sedans except for me. People don't want minivans except for me. They want something in the middle, like a crossover. I actually have people drive me. I don't even like to drive my car. But the fact is that this is the future, and they're doing such a stunning job at it. It's just not a car company. It's a technology company. It might end up being something like a Boeing, which will sit around for a while because Boeing had so many orders. They couldn't fill the orders. Tesla might be in the same boat. It might stagnate for a while. But again, is a long-term good buy.
Larry, to stagnate seems to be the key here. They expect fourth quarter non-GAAP profitability to be consistent with the third quarter. It looks as if things are kind of leveling off for them, and that might be what the investors are picking up on.
Okay, Larry, stand by just a moment because we are coming up in just a few minutes. We have a bull and a bear, and they will parse what they see in these numbers. Craig Irwin and David Dietz, they were in our last hour battling it out, and we'll see what they think from these numbers. Okay, in the meantime, we need to get you a stock alert here, and it's in essence, Jason Pride, that the markets looked pretty resilient today, having been down 117% at one point for the Dow Jones, 17 points rather, for the Dow to come back. What does that say about the resilience here? Jason?
Oh, I'm sorry. I didn't realize you were talking to me. I think we have to recognize that investors still have to be in this environment. They still have to be constructive, not overly aggressive, but constructive, positioning their portfolios to buy equities when they find the opportunity to do so, to take risks with their portfolio, but perhaps not to overstretch themselves too far. There are going to be blips along the way. There are going to be downdrafts when something goes wrong. But behind the scenes, the underpinning here is one of support and one that's going to push the markets higher.
Jason, give me an idea of what you like. I know you advise people buy dividend growth. When I'm looking at dividend yields, I've always liked Intel. I mean, that's almost a 4% yield there. I've always loved UPS, not quite as high. But what do you like? What stocks are you seeing attractive right now?
So the goal here is really to provide dividend yield and dividend growth to the portfolio, not to just go after the highest yielding stocks or the fastest growing companies out there. What you're really looking for is profitability, high margins, high free cash flow yields for the companies so they can buy back their stocks and they can pay out extra dividends. Three companies that kind of fit this mix in different industries and sectors across the board are Microsoft within technology, 3M within industrials, and Johnson & Johnson within healthcare. All three of those opportunities provide a reasonable valuation entry point. They provide nice, solid dividends that they're growing in the tune of 5 to 10, in some cases higher than that percentage growth rates, and command profit margins that are at the top notch compared to many of their peers.
Jason, thanks. Thanks for the suggestions. Jason Pride and Larry Shover will see you in a few minutes for the S&P futures close.
So the S&P futures just closed. Let's head back to Larry Shover in the pits of the CME. Larry?
Well, Adam, you know, more than anything else, traders are in protection mode. And we've had a huge rally. We have a lot of things coming up with ECB, the labor report coming out, our tapering. No one seems to know when we're going to taper, if we're going to taper. So right now, full protection mode. A lot of people are saying, hey, the year's over for me. I'm not taking any more risk. I'm out of here. Coming early, but that's how traders are acting right now.
Is that a mistake, Larry, to do that?
Yes, I do. I think it's a huge mistake to do that, but people are afraid. People want to take their profits and run, not realizing that there's a lot of potential between now and Christmas. A lot could happen.
Larry, is the fear over the U.S. economy tapering, or is it the ECB stress tests on banks?
I think it's tapering. That's the thing. And what people aren't talking about, there's still an outside chance, good grief, that perhaps they'll switch gears and flip-flop and say, our numbers aren't good enough. We're going to have to continue to print money. That will take everybody by surprise. But, I mean, that's a very, very low probability that that will happen. But nobody's talking about it. Everybody's talking about when's it going to be, December, March, April, June. Who knows when? But it seems like right now the consensus is March of 2014.
All right, Larry Shover, thank you.